Okay. There we go. I don't know what happened there. I hope that sounds all right. Let's see what will happen in a second. Okay. There we go. I don't know what happened there. All right. Infinite loop. All right. And we're back. Oh, gotta mute it one other spot. Infinite loop. All right. Okay. Now we're better. I gotta get the webcam going. Where's the webcam? And we're live. Here we are. On the move today. Oh, 1 second. Okay. Now we're back in business. Here we are. Got my good shirt on. All is well. Getting organized. I mean, I could even use the whiteboard tonight if I wanted, if I think of anything. I don't know. I just got some fresh markers, so we'll see what happens with that. But I hope everyone's doing well. I feel like I'm at a point in my life right now where a lot of stuff's just evolving and time's moving fast, and it's crazy. It's quite the journey with GameStop. It's a time period where yeah, we're seeing the stock price not do too well, but nothing's really happened with the company since the last quarterly earnings. The only thing that's happened is Ryan Cohen became chief executive officer, right? On top of becoming chairman of the board. So, with that being the case, there's been no fundamental updates, but the share price has suffered. Someone asked me yesterday, "Oh, like Tetron, how's GameStop doing?" Or like just a friend of mine, like you said, "Oh, how's GameStop doing?" And I was like, "They're doing good. The stock price isn't doing great." That's kind of how I described it because fundamentally, not we don't have any updates. We won't until Q3 comes out. So that's really what it boils down to. Definitely a hot topic of discussion that I've seen is, excuse me, the uh, South Korean stock market had a huge, huge day off the back of the ban of naked short selling, or it's short selling in general. It was banned. So regulators found circumstances of possible naked short selling after discovering cases of the practice by global banks. Retail investors have protected against short selling in Korea, saying it leads to unfair advantages for foreign institutional investors. The Korean market had its worst monthly drop this October. Interesting. So then it just snaps right back, and you can think what you want of that information, but if a major country like South Korea is indicating there's something going on, is it that impossible to think it could be happening elsewhere, right? Maybe. How exactly? I'll leave that for you to decide. But yeah, it's quite the journey, right? We're almost in 2024. It's actually remarkable that it's almost 2024. Like, I just feel like time's flying, and outside of GameStop, just things continue to evolve. The world continues to evolve. I think Bitcoin is going to do well soon. I mean, the Bitcoin halving's coming up. We just keep creating more and more dollars, especially with this other war going on, which I've personally tried very hard to not figure out what's going on. Not because I don't care, or I don't want to see anybody, like, any kind of war, right? Anybody dying. That's not. I'm not saying like, oh yeah, I don't care. Like, it's all whatever. I'm saying I don't, for like my own well-being, I don't even want to read about what's going on because it's just all like negative energy, right? So I'm trying to focus on the positive, and the other war going on. I started reading about that, and I'm like, oh my gosh, like, this is crazy. And like, again, I don't want anybody to be at war. I don't want anybody to, like, I don't endorse war in any way, but yeah, I don't even know what I'm saying. I'm just saying, like, I've purposely lately, anytime there's a new, like, controversial topic that becomes like the big drama of the internet, I just am like, I'm just gonna keep doing my thing and living in my own world and focusing on what's best for me, because I can't personally affect those things. And yeah, I could spend time and energy on it, but I'd prefer not to, right? Time and energy is valuable. So like, I want to put it where it's best for me. So as of late, Been just really trying to fix my habits as a person, just day to day, the small stuff like that. Because to me, with investing, it's a long term game, and GameStop's absolutely made me think that way. And, it's not just GameStop, it's the idea that, you don't truly know how things are going to go in the short term, right? And if you keep building the right habits and building yourself up and just making the right decisions, like doing the small things right, it really just makes day to day much easier. And then in something I'm doing, right, which is like seeking investment opportunities, that's something I don't have to be like constantly like, oh, is this the right thing? Should I do it right now? Should I make this move right here, right now, next, this, that, right? Like I can be, okay, well, I'm just focused on the small things. And then when I have my time, I'm like, okay, I'm researching this in depth, right? And, there's one of my common trolls on my Twitter account was like, oh, what do you think about the GameStop walkouts? And they changed their warranty policy. They're screwing pro members. I'll look into all of it and I'll counter, right? But I got to look into it before I'm going to talk on it. So, there's a lot of negative sentiment out there, but I mean, what else is new with GameStop, right? I mean, there was a new Form 4 filed. Looks like Daniel Moore was compensated with some more shares. Still don't know why. Every time I pull up GameStop now, this stands out to me. I'm like, there's no dividend. Why is this here? What is this from? It's quite remarkable. Market cap's at 4.13 billion. Again, it's been said a gazillion times before, but I'll say it again. Almost 1.2 billion of cash equivalents. And it's funny how that's always like, oh well, they got all this cash, but they're not doing anything with it. And then I see a Kyoto article, or not Kyoto, Kaya. What the heck is that stupid gaming like writing company where they always just write negative articles about GameStop? Like, oh, they're screwing over their employees despite having all this cash. Like, it's just funny how when you want to tell a certain story, any point can be spun as a negative or a positive when it comes to like the financial media. And that's part of why I'm doing, I guess, financial media on my own. I'm just discussing things from my own viewpoint because I feel like everything's so fabricated, and I'm always just trying to give it to you guys like super real. Just like, hey, this is what I'm thinking. Like, this is where I'm at. I'm never gonna come on here and be like, if you don't buy this, you're missing out on the greatest opportunity of your lifetime, right? For whatever it may be, whether it's Bitcoin, GameStop, oil contracts, right? S&P calls. Like, I'm never gonna come out and say like, this is the best thing since fire, right? This is the best thing since the light bulb. I'm just gonna come on here, talk about things that people are talking about, just discussing what's being discussed and just doing my own thing, just riding my own wave. But that's just kind of where I'm at. A quick little Tetron catch up. But it's funny. I just see in my fantasy football league, somebody just added Aaron Rodgers because they see him like mad getting ready on the sideline tonight, I guess. Interesting. But let's hit the chat real quick. Wendy, hope you're doing well. Thanks for popping in as always. First to like, Jackson's. I appreciate that. Drop a like, guys. Always much appreciated. Xbit, glad you're here. Hope you're doing well. Everyone's saying hello to each other. What's up, bag holders? Haha, Bossa, $5 a share by Q2 2024. Bossa, that's crazy because if it actually got that low, they're going to start buying back shares. I would be absolutely shocked if it happens, right? But if it happens, good for you, man. You got your prediction. I foresee how I foresaw it being at $12 a piece. Laughing my ass off. You must be the oracle of Busa Versa. What happened to the NFT marketplace? We were attacked. I know Kung Fu. Nice. That's awesome. Attacked by these nuts. Keep averaging down. 2024. Yeah, it's crazy that 2024 is pulling up right now. It's actually nuts. What's up, Fresh Maker? Hope you're doing well. I was having mic problems like right as I was starting, and I was like, "No, yo, where's Fresh Maker? He's got to tell me like fix the mic. Something's wrong with it." My Omega watch just came in. Profits courtesy of YG. Nice. Boss, are you SNIG on Twitter? Or are you're not Adam, right? You guys are those are my two biggest haters. Like it's actually crazy because they're the two most consistent commenting, and it's hilarious because they're just boosting my engagement and they're just helping me. So like I just let them do their thing, honestly. Like I think it's great. Based on Superstock, the pummel stock price really has a lot of apes give it up. Good to chat about the bump feeling, but we're 1 month away from a green T12. And Amber, thanks for being here. Hope you're doing well. Yeah, so I mean, I could see why people are bummed out, right? Of course, I don't think anybody can predict the short term. That's what I've been saying for a while now. But to me, it's really about the journey and the learning experience. Ultimately, just taking the most out of the situation, and I think that's the case for anything in life. And again, I'll kind of go back to what I said at the start of the stream, where yeah, the stock price hasn't been doing well, but the company's earnings don't reflect that, right? If we have a poor Q3, that it's fair to say that, but without updated numbers, then you could say that all you want, right? Until we get updated numbers, and the numbers will speak for themselves. So it's definitely an interesting time for the company, and I think more and more, as there starts to be this more and more negative sentiment, we're gonna have to see what happens with GameStop Player. Like, when is that gonna launch? Obviously, number one, and I don't think it'll be like anticipated. I think it'll just be like, oh, it's here. And then the next question is, what does it look like? What does it entail? What's the roadmap for it? How does it eventually get monetized? These are all the different questions. Do we see more stores like the Milan, Italy store? And on top of it, the average consumer, I feel like, is just getting weaker, where we're in a weird spot where the wealth gap, right? Like, if you just put it straight down the middle, like the middle class, like if you're absolutely perfectly in the middle, it's just being like spread like this, right? Like, that's how I view it, at least, where the wealthy are getting wealthier because assets are inflating, and the poor are getting poorer, or the lower class are getting lower because they're just constantly trying to keep up with things, right? And I'm not saying like, oh, like people are like poor, they're making poor decisions. I'm saying, like, if you're in a spot where you can't be like acquiring assets, right? Where you're just living paycheck to paycheck, it's becoming increasingly difficult to do so because of inflation, right? And inflation's the true hidden tax, and it's it's wild. It's really wild seeing what's happening in real time to the economic situation as a whole in America and worldwide. And it's one of those, you just got to keep observing and learning from it. And that's my viewpoint, right? Like, you maybe have more time in this game than I do, and you're, oh, I've seen this before. Like, I knew the right thing to do, and that's great. Like, I'm here to just openly discuss, And for me, I'm like, okay, it's a unique time, but to me, GameStop's a truly unique investment opportunity with everything that's happened around it, and it's really, I boil it down to risk versus reward. When I'm not, doing anything on margin or anything like that. So whatever I'm putting in is what I'm going to lose, and I'm only ever going to put in what I can afford to lose. And I think that's a golden rule to follow, even as a stock you like is falling, right? For example, GameStop. You still don't want to be leveraged into it, right? I mean, if that's your game, that's fine. But I'm just saying, if you put yourself in a position where you're only putting in what you can afford to lose, it makes it just so much less stressful. I mean, that's my viewpoint, at least, and that's what it boils down to. And it's, to me, really coming down at this point to results. It's, the company has to really start to perform, or this can keep happening. But if they are at least turning a profit and the stock price goes all the way down to $5, they have $3.92 in cash right now, cash equivalents, marketable securities. They can start to buy back a ton of stock. And, that kind of brings up a new, not new, but increasingly debated topic, where it's like, is DRS doing more harm than good because of the volume and things of that nature? But for me, right, like, I pondered on this a little bit today. I'm like, the reason I'm personally directly registering my shares, of course, always make your own individual decisions, right? And before you are going to move your capital or your assets in any way, you want to research what you're doing, right? And for me, what it comes down to is, when my shares are in the name of, I think we have to get a paint open tonight. I'm going to have to get fancy. But in the name of, like, Fidelity, right? So it would be, where's the text box? Okay. So, like, when my shares are held at Fidelity brokerage shares. Whoa, that's not how you spell shares. So, like, if I have them in my brokerage account, they're in the name of Seed & Co. By technicality, right? They're in the name of Seed & Co. And then it's like, for the benefit of Seed & Co., Fidelity, and this isn't maybe the exact structure, but they are officially in the name of Seed & Co., right? FBO, it would be like Tetron, and then if my account number was 12345. This is, like, very generally speaking, right? So that's how my shares are held in Fidelity. Ultimately, they're in the name of Seed & Co. Like, that's the first name on it, right? So it's, like, for my benefit. Like, I'm the beneficiary of them. But, and yes, they are in Fidelity, but it's still technically named as Seed & Co. So if there was theoretically something strange going on, it all being in the name of Seed & Co. would be the greatest common factor, right? And then if I choose to go outside, right, because this is, let's say, DTC, right? And then if I had Charles Schwab shares, which rumor has it, their capital situation isn't the greatest, right? That's something I haven't looked into too far, though, to say, oh, yeah, that's definitely the case. But I'm just saying, rumor has it. It would be like Seed & Co. Seed & Co. Charles Schwab. FBO, Tetron, and if my brokerage account with that was 98765. If theoretically I want to transfer like back and forth, right, between the two, just going back and forth, they're able to do this through something called, or when I say they, like just financial institutions are able to move stuff through something called the ACAT system. And the ACAT system is operated by the NSCC. And then the NSCC is the National Securities Clearing Corporation. See, the only thing about paint, you can't move it. And then the National Securities Clearing Corporation is an entity of the Depository Trust Company, right? So the DTC, an entity of it, is the National Securities Clearing Corporation. And the DTC's representative in the market is Seed & Co. And the National Securities Clearing Corporation is facilitating the ACAT system. The ACAT system makes it so that they can quickly change shares, right? You don't actually need to use paper certificates going back and forth anymore because we're in a digital age, right? But how do they instantaneously do it digitally? It's because every share in a brokerage is technically in the name of Seed & Co. So it's like a shadow organization that the average person doesn't even know exists, but technically it like owns all the shares. But technically not, because Fidelity has some of them, Charles Schwab has some of them, but it's like when there's just one overarching entity, theoretically collusion could happen, right? And just some potentially strange things. That's all I'm saying. And like I'll leave that up to you to decide whether or not that's the case. But with computer share, right? Like if I want to get outside of this, the only way out is, let's put it right here. Only way out of DTC / Seed & Co. Fix this up. Would be computer share or directly registered shares. And then it would be what the heck are they called? Wow, how am I blanking this? Transfer agents, right? Shares held with transfer agents. Examples would be computer shares, one of them. You have AST, who I think now goes by like MQ or something like that, or EQ. I don't even know. I think they recently just went under a name change. You have Continental. Maybe I'm spelling that wrong, but there's various transfer agents, right? And each company elects a transfer agent. So in GameStop's case, right, it's computer share. So I'll put that here. So GameStop's elected transfer agent is computer share. So when your share is in computer share, right, then it's in the name. I'm running out of colors here. Let's get a new one. Boom. This funky green. Let's do it. So it would be in the name of just Tetron. So you see the shares actually directly registered on the name of Tetron in the transfer agent, whereas in a brokerage, it's technically under the DTC within the name of Seed & Co., specific to the brokerage, specific to the account in the brokerage, whereas this is just simply like in my name and also I guess the account number too. So like if the account number was like computer shares like C like 001, right? So it would just be without, an overarching entity. So it's a different type of ownership, and there's a lot more things that happen with the brokerage, but overall, to me, like where I'm going with this is why I personally chose to directly register shares is in the event there is another like removal of the sell button or just some other funky market mechanics happening, right? It's coming from the top of DTC, which is all this right here. So with that being the case, I want it directly registered in my name, right? Because if I want to sell or whatever it may be, right, or take any kind of action at a ridiculous price point, theoretically, right, all just speaking theoretical here, then I want it in my name and I want to have full access to it. Whereas I know I don't truly have full access, right? A brokerage can be like, oh, like I suppose computer shares website could go down, right? I guess that would be the biggest risk. But ultimately, to me, it's about it being registered in my name. And as more individuals have directly registered shares, you have less and less shares within the DTC. But to me, like it doesn't matter almost because ultimately now it really is going to come down to like originally, right, there was the theory that if a lot of people just directly register shares, it's just going to force the share price up, right? But now it seems very evident that it's all going to boil down to with GameStop. I'm going to put this very large. Boils down to company performance, profitability. Because if you're profitable, you can adjust the business in various ways. And that's not how you spell boils. Oh my god. Here, we'll put right here. Boils. Right? Oof. I'm rough on the grammar. But, or we'll just put right here. Comes down to. I just ruined my whole infographic with this. But we'll remove that in a second. But the point being, it all comes down to the company's performance because that is what's going to drive them forwards. And if theoretically, right, there's not a lot of shares trading back and forth because of DRS, if the company's doing well, then it just kind of makes the moves more violent both ways. So one of the first things my grandpa taught me would just introduce me to the idea of stocks and investing. He's like, anything that can go down super fast can go up just as fast. Anything that's you see going up super fast can come down just as much, just as fast. So I'd say we've seen GameStop fall relatively quickly and, largely, and I gotta get a bigger eraser, but whatever amount it's fallen day to day, then I forgot I have my where is it over here? My little stylus. So let's remove this as I'm talking here, but pretty much it comes down to like what is the company actually going to do because maybe it'll impact like how the shares are moving, but for me it's like about the ownership in my name. So if there is something funky happening at any given point in time, like I truly have it registered in my name, like that's what it comes down to for me. And if the company's performing, then individuals can have their shares in DRS, individuals cannot. So that's kind of just some of my latest thoughts on it, and I'll keep looking into things as various information comes out. And I'll be honest, I'm a little behind on stuff. I haven't even really been on Superstonk lately. I haven't been scrolling Twitter as much. I've just been, working on myself, and like that's what's best for me right now. That doesn't mean I don't care or like I'm not interested. I'm not still, following along here like and whatnot. But it's just, my priorities are shifting at this moment in time, and there's just some stuff going on in my life that I have to just get myself in order, and it's just gonna make me better on YouTube and as a person and everything as a whole if I just make sure I'm focusing on that. So that's kind of where I'm at right now. Those are some of my thoughts on, computer share and just perspective on the DTC and whatnot. I hope this all makes sense to you guys. Let's hit the chat right here. Damn, Bassa, you're talking mad in the chat. This is crazy. Tesla already squeezed. Oh my god, I don't even know if I'm gonna be able to read all this. Even the negative sentiment. Yeah, I'm just gonna go to the recent. Damn, I'm way too far behind on the chat. But Baza, it's crazy. Like people like you are just boosting my channel by just engaging in the stream. So I appreciate all the engagement you're providing in the chat right now. Like, you could just do your thing. um, Baz, if you're hating so much on GME, why are you here? Shouldn't you be elsewhere? Exactly, Lena. Exactly. It's comical, and like I genuinely feel bad for people like Bassa because it's like you don't have anything better to do than to just provide like negative energy and just go out there and just hate and like, Gary Vee has said this. Like, as was the first person I heard it from, but I've heard it elsewhere. He's not like the first person to say this, and I got to get my charger plugged in here. But it's just true, and like the more I kind of see things and understand things as I grow older, and I'm not saying I'm this old wise man, right? But I'm saying anybody who's out there just projecting just negative energy or just hating, like I truly don't care. Number one, and number two, they probably have something bothering them in their lives, so they feel the need to just go be aggressive and say whatever boss is saying in the chat, right? Like people like that, it's like they have something that's bothering them, so they have to go take it out elsewhere. Like that's just the truth. And some could say to me, like someone could counter and be like, "Oh well, you are shitting on Bed Bath and Beyond, Bed Bath and Bankrupt, blah 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 blah." It's like, no, I think that's more so just trying to point out the facts and that like there's a lot of people being misled with that. There's this super secret merger, which again, for the gazillion time I'll say it, if there truly is a super secret merger, because now it's suddenly open $12, right, on exchange, I'll admit I was wrong. It is more so just talking about the information, whereas you just come in like, "Wah," like there must be something bothering you. So I actually feel bad for you if that's the case. All right, plugged in. But really, I hope everyone's doing well because it's really a learning journey, and don't take this the wrong way what I'm about to say next. But if truly somehow, right, because I think nothing's for certain in this world, things don't work out for GameStop, whatever it may be, right? If ultimately you took out the experience and you took this time to learn a lot about investing, the importance of owning assets, and just greatening your knowledge, it can be a learning experience and you can make money in various other opportunities in various things down the line. That's my perspective because I think it kind of is also like it keeps you humble and there's like a humility to it to be like, you know what? It There's always that small possibility that it might not work out, right? And it keeps you honest in a way. But let me be very clear. I'm not saying like suddenly, oh, I'm bearish, like things are going bad. It's just a negative sentiment time, right? And I'm just saying, like, I think it kind of keeps you humble if you're a long term investor. And if you're taking this opportunity to learn, no matter what happens, right, you're winning because you've taken the opportunity to better your knowledge and better yourself. That's what it all comes down to. But I still think, we need to see Q3 earnings. What are things looking like? Because as of last earnings, they're just teetering on the edge of profitability. So if we have a good Q3, which by the way, they're about to recognize a one-time profit of about $5 or $6 million. So that's just based off some sales of like right here, about a $6 million gain in Q3 from the sale of European land and property. Nothing major and not like game changing, but it's something that will boost the bottom line. So if they are theoretically break even operating wise this quarter, that would boost them for the quarter. And then a strong Q4, a strong holiday season, all of a sudden they're fully profitable for the whole year. And with SG&A being cut, if that can be maintained, these SG&A cuts that we've seen happen, really, I would say mostly from 22 going into 23. I think some of the cuts were happening still in 21 and early 22, but there's a lot of spending also to like adapt the business, right? Like, because if you're going to implement change, it does cost money, right? So it's like walking the fine line of like, hey, we're spending to implement change, but we're also trying to cut spending. So if they can just maintain lower SG&A, which is generally lower overhead, and just focus on margins, if they can consistently turn a profit, they continue to raise their cash pile, they can continue to earn more interest on said cash until the right opportunity arises that they deem to be the best opportunity, whether it's an acquisition or share repurchases. I think something that would be great, and this has to be once they're absolutely rocking and rolling, and I don't see it happening for quite a while. Dividends, I personally want cash flow. I know some people don't necessarily agree with that. For me, I like the idea of cash flow in this crazy world we live in because when there's just a lot of inflation and uncertainty, when you have cash flow, like for example, Pepsi, simple, just consistent stock over a long period of time. There's something called a dividend aristocrat, which just basically means by definition, year after year, the company always raises their dividends and they're always providing value to shareholders. I think to me, that's where I want GameStop to go in the long term. Not necessarily everybody agrees, and that's like once things are operating, they're consistently having like a nice margin of, I don't know, maybe 10% on the bottom line every single quarter. That's totally just random number I pulled out of my butt. So pulled out of my ass. So I mean, yeah, that's how I view it in the long term, where dividends then also just incentivizes me to continue to hold because I'm getting, cash flow on my asset. And as I start to think about real estate in my future and being an asset I own, I look at, cash flow from renting it out. Like I want to do something called house hacking, where essentially what that means is if I buy a triplex and I live in 1/3 of the triplex, right, with my girlfriend or friends or whatever my situation is going to be, then I'll rent out the other two, collect income, and then I'll ideally be fixing it up while I'm there, raising the value of the property. And then once I can move out, go live in my own place, and then start renting out that third section of the triplex, and all of a sudden have an income producing property, right? So, and with collecting rent, that's cash flow, right? So to me, it's about cash flow in the long term. That's kind of where my head's at. But yeah, that's where my head's at. Let's hit the chat again. More withdrawals than deposits. This might not be for you. There is talk of a GME dividend. Yeah, Alina, it's not totally impossible, but yeah, let's see. People like Bash run infrastructure channels to plant seeds of doubt on our investment. Exactly, Alina. That's the thing too, where you look at things like that, like and characters like that come onto videos like mine or go on social media, and it's like you really don't have anything better to do, and it's like, what's your intention? Like, why do you bother? Like, I don't know. Like, it's fascinating, right? In a way, it's kind of fascinating. And something I'll be looking at in the next quarter, just to quickly touch on this, this was my original write-up of how, in GameStop's strength in the balance sheet gives them the opportunity to focus on the long term, because if they were still dealing with debt right now being a primary thing, then they would be paying high interest on that debt. So if you look at the balance sheet, right now they have, as of the last quarter, right, and I'm going to update this, like I'm going to try and update all this stuff once the next earnings report comes out. $3.92 cash equivalents, marketable securities a share. I'm basically just going to say that's cash because marketable securities are, if you look right here, if we zoom in, cash equivalents consist of, and this is per the 10Q filing, consists of U.S. government bonds, notes, money market funds, cash deposits at commercial banks, and highly rated direct short-term instruments that mature in less than 90 days. Marketable securities are made up of highly rated short-term government bonds and notes, as well as time deposits that mature in less than 1 year. So essentially, it's very liquid, right? And anything that's seen to be liquid is current, and current by definition on a balance sheet is less than 1 year time period, right? So if they're, like going to just continue to keep a strong balance sheet, if they're turning a profit, they're going to just be able to raise their cash, they're going to be able to earn more interest income, they're going to be able to buy more marketable securities, right? Something you have to watch out for, or not watch out, but just be mindful of. And I've touched on this a little bit in the past. Let's say the cash flow statement. So if GameStop does more marketable securities, right? Because right here, you see where interest income for the last quarter, they made 11.6 million. Whereas the same quarter last year, they made 3 million, right? Or 0.3 million. So a much greater amount, because the same 3 months last year, the interest rates were very low compared to the interest rates of the past 3 months of the second quarter that was reported. So now I expect this interest income to be actually even higher in the upcoming quarter. And that's only on cash and cash equivalents, right? Because if you're in a money market account, right, like for example, if I have money in a high yield savings right now, which I do, like I have Marcus by Goldman Sachs, I also have Ally savings. They pay high yield dividends, right? Or not high yield dividends, but high yield savings. As I'm collecting, it's just collecting interest income, right? Because they're paying me a little under 5%. They're turning around and buying T-bills that are paying them like 5 point something percent. So they're keeping the difference. That's how they make money on it. And when I'm making that money, right, I'm reporting it as income. So this is being reported as income for the company, right? Statement of operations. Whereas with marketable securities, it's being seen as purchases, right? And then proceeds. So what that means is you're buying marketable securities like at a discounted value, and then when they mature at like the face value, like very roughly speaking. So in this quarter, they bought more marketable securities than those that matured. So with that being the case, it makes the cash flow from investing activities look 30 million worse than it actually was, or about 43 million worse. Because if this number is about even, they bought the same amount than those that matured. But if they bought a lot more marketable securities in this upcoming quarter, it's going to skew the cash flow. So that's something you have to be mindful of with the total free cash flow of the company on the bottom line. But ultimately, still, they need to improve. And this is 6 months, the operating cash flow. So if you look at 6 months so far this year versus 6 months last year, there's still a significant improvement. And theoretically, they could still not be profitable, or like net income operating activity cannot be net profitable, right? Or net positive. And still theoretically, their balance sheet allows them to be in a good spot where they're not going to just rush to take on high yield debt, right? If GameStop went to um, issue bonds right now, I would imagine they're gonna be the bank's gonna give them a rate of what, like 8-9% they would have to do, like something like that. But they also withdrew their credit rating a while back, so pretty much saying like, yeah, we're not doing that. And also Ryan Cohen, you got to think back to his letter that he wrote, and I had made a post about it. I got to get that on here at some point, where he basically said from the start, like, hey, treat the company as if money's as if it's your own. I'm in here now. I'm riding with the ship, ride or die, basically. And some people say, oh, it's fake and whatnot. I don't think so, because I think it's more so just pressing the matter for the people working at the company. Because I think if you're investing in the company, like you like the stock, you believe in the company and whatnot, but the people that are working there, you want to make sure they're all on board. Like they're all within that same like culture of like, hey, we're going to be extremely frugal. And that's what was established at Chewy from day one with Ryan Cohen. And then when Larry Chang came on board, as being the first major investor through Volition Capital, then they kept that tone. So the difference, and I've touched on this a little bit in the past, but I'll just say it again, between GameStop and Chewy, to me, the major difference for Ryan Cohen in how the companies operate. With Chewy, it was about establishing the culture from the ground up. With GameStop, it's about shifting the culture, and to me, that's a whole different beast. And in seeing my own time at, I used to work at Marshalls. I worked my way up to be assistant manager, and I worked there almost 4 years. And in that time, we went like I worked my way up to assistant manager, but new management came in after a couple of years, basically. Like main store manager and the district manager got changed to like the top, right? And they really pushed for like culture changes. And they told me like, if we want to promote you, like you have to push the changes we want and to change the culture of how we hire people, how we do things day to day, what the standard is for the store, right? And just raising the standards, all that. And that was really difficult because people don't like change, especially when they've been doing something the same way for a long time. So when you establish it from the beginning, you can maintain it, right? Or somebody comes in to apply, you can just, if they don't fit the culture, it's not going to work, right? But with GameStop's case, they had to do a lot of shifting. Some employees get let go. Some stores had to be closed down. Oh, we've been trying to do this, but this is actually not the best thing to do now that we've been putting this in place. So shifting culture is much more difficult than actually establishing it from day one. Because from my time at Marshalls, when we were going to shift, there was people push back. No, why do you care about this all of a sudden? Like, come on, come on, bro. Like, especially the younger guys and gals, like they're like, oh, come on, it's just, come on, you're the only manager in the store, it's all I'm like, yeah, but when they come in tomorrow and see a mess, like it's on me. You know what I'm saying? And they're, because it used to be like that didn't matter, but now it did. So once that became prevalent in my mind, I was like, okay, well, now you guys, I'm sorry, I like you guys and I'll be respectful of all of you, but no excuses. Like this has got to get done, and if it doesn't, like I have to say something if you're the weak link type of thing. And it's not exactly the same scenario, but this is just my perspective, like on company culture. And in an office job now, I can see they've really focused on culture a lot, and they've built things up from the beginning. It seems like of how the company culture will be. There's not like this sudden shift. Whereas with retail, there has to be a shift, and it's not easy. It's definitely not easy. So I think that's, the biggest challenge, so to speak, and kind of what, that letter was about with Ryan Cohen, to circle back to that. And the expansion opportunity for GameStop, where I see it, is also the Milan, Italy stores. More stores like the Milan, Italy, based around experience. So I guess I could throw that in here because I've been meaning to put that. Other growth initiatives. Oof, my grammar sucks, guys. I apologize. Initiatives. Yes. Boom. Spell that shit right. Other growth initiatives. And I'm going to touch on this in a second because this is an upcoming write-up for me. So more experience-based stores, similar to Milan, Italy location, where the Milan, Italy location is basically broken down into 3 segments. Classic, GameStop, floor 1, and these are in no particular order because I haven't been there. I haven't been to Italy. One day I do got to go though. Seems awesome. And definitely check out the GameStop store if I do. And then the other floor is based on VR slash experience. VR slash VR experience type of thing. I forgot there's a little more too. And then the third floor is more like toys, games, toys and games, right? And this is very roughly speaking, but toys and games are generally higher margin items. And I have to, I'm just doing this completely off the dome here. I have to read up on the Milan, Italy store again. But basically, it's more of an experience-based store. So more experience-based stores, that's a possibility. And, something else, Web3, obviously, we have GameStop Player coming out. That's the major one. We're going to see what's coming on with that. And I would like to see the company do more and more GameStop branded products, right? Like this was something that came out of nowhere. They did like the 2 terabyte drive, it's specifically for PS5, but it's compatible for PC just for like additional space. And just I just throw it out real quick, but with the passion behind GameStop brand and ever evolving PC parts market, I really like the idea of the company creating more products in-house on the GameStop brand. Passion for the brand would help drive product sales, but of course, the in-house products created would have to be high quality. Creating a high quality of any kind, not just necessarily PC parts, will attract more customers beyond those that are passionate. Because ultimately, you want to delight customers, and how you build more of the brand and the loyalty is doing more, selling more high quality products, right? So that, yeah, if they can do more GameStop branded stuff, but they shouldn't just do everything, because if it's shit, nobody's gonna want it, right? Like, and then that's how you can kind of lose some of the loyalty, and you're not really able to expand upon it. But if you make a high quality product, then generally, right? Like if you think about when you go to the grocery store, if you buy like the local store brand Pepsi instead of actual Pepsi, it's always cheaper, right? Because it's cheaper for them to make it in house, and that's like a very extreme example. But even like certain companies, right? Like if you go to like an average store, like a Best Buy, they might, I don't know what their exact situation is, but they have, if it's their own branded product, right? If it's like the product that's branded a store, and GameStop does also have Atrix, which is their brand. So if it's their own branded products, right? Like if you're looking, oh, do I get this 2 terabyte hard drive that's by GameStop, or do I get this other 2 terabyte hard drive? You're like, oh, actually, I should probably get the GameStop one. It's a little bit cheaper. And since the company's making it in-house too, they also are able to make a higher margin on it, right? I mean, obviously, there's logistics deeper than that. And that's where I think you have to have a good management team in place to make those kind of decisions, where how can we make the logistics work where we're going to sell our own products in-house, but also be able to get a better margin on them than the products we might be reselling, right? Because if this is not GameStop branded, if this is Logitech, then you got to buy it off Logitech for whatever price, like say 140, and then maybe you turn around and sell it for 180. Whereas in this case, GameStop's selling this for 150, 199. Maybe they're able to make it for 100 in-house, and that's a way better margin, right? So that's kind of where my head's at with that, at least, just very roughly speaking, and how I see, opportunity for them to grow and just continue to evolve. But really, just making a profit consistently is number one. And I think when you ever want perspective of how Ryan Cohen's operating, like what he's actually doing, I think it's always good to go back and look at his stuff before he got involved in GameStop, what kind of person he was, because you don't just like throw all that out the window and then do things completely different with GameStop. Like I guess that's theoretically possible, but my point is you can get perspective of how he is because he's become very, very mute. He already didn't put that much stuff out there prior to being involved with GameStop, but since then he's become, excuse me, like very mute. So just to give you like more perspective on him, I think it's always good to look back on Ryan Cohen pre GameStop, right? And then also you could look into some of the other members who are running things. Let's see. Yeah, Xbox. He was a scrub. I've told him withdrawals and deposits. Something for you. People like Bass Trade channels. Oh, yeah, Tetron, Jason. Thanks for being here. Hope you're doing well. Great stream. Taco Bandit. Thank you. I don't think I've seen you too much, so I appreciate you being here. Maybe you're. I know there's what do they call it? A lurker, or that sounds bad. No, but like when you watch a stream, but you don't necessarily always comment. Like, there's definitely people who watch and like don't always comment. Like, I appreciate you too because there's things I hop on and watch. Just miscellaneous things, and I've never commented. Right? Just for example, like I like hockey, so I listen to the Spit and Chicklets podcast. Like, just to it's a good keeps me in like updated with hockey because I love the sport, and it's also just brainless thing, right? But I've never went in and commented anything, right? So like I understand like, not everyone comments. It's fine. It's not everybody's cup of tea. Like, it's totally good. So, I appreciate you all for real. Hey, everyone. Yep, I agree, Tetron. Brayton, thanks for being here. Hope you're doing well. What's up, family? Abe, hope you're doing well, man. XBit dropped 100K in the chat. Yeah, dude, XBit's a boss. That's for sure. The rich man, richer than any of us. My online bestie. Hey, buddy, keep up the great work. Jay, hope you're doing well, man. Thank you. Thank you. I'm just doing my best out here. And yeah, and just continuing to focus for me outside of GameStop. It's about the importance of owning assets. Like for me personally, GameStop, S&P. I don't have real estate yet, so I guess I should say not yet. Exploring opportunities in the future, but in a high interest rate environment, I'm not just gonna go ahead and rush into anything. And also, I'm just not in a point in my life where that's something I'm being involved with. And this is like the golden rule to investing. Never invest more than you can afford to lose. And with Bitcoin, I think it's, in my eyes, right? Like, and I'll add this here, a alternative asset class that is up and coming. And I would describe myself as a Bitcoin guy more than a crypto guy. And don't get me wrong, I'm really writing this because I'm just thinking about, like, I want to keep making sure I'm writing what I'm saying. So as I'm looking at this in the future, I'm like, how can I better organize this file, this information for whatever I'm going to do next? Don't get me wrong, I like Ethereum as well, but mostly the functionality and building aspect. Whereas Bitcoin, right? Bitcoin, finite supply, being created on a set schedule. You could say like halvings, right? Like there's a halving coming up, so there's going to be less Bitcoin created. Whereas the US dollar is being printed nonstop, right? That's just roughly speaking. And I'm just kind of throwing stuff out there, but I think it's just becoming more and more important in an inflationary world to own assets, right? Because assets inflate as well, right? But at the same time, when things go bad, assets fall in value, right? Fall in value, right? And then that's where my perspective becomes like, okay, well, that's where cash flow is important. And you have to find what's best for you. Like, I think that's really what this whole journey's taught me. And, I've followed things before being involved in GameStop. So it's not like I was brand new to investing. I went to school, I got a basic finance degree, nothing super sophisticated, but I didn't learn shit in school. I pretty much taught myself everything. I mean, relative to stocks, I mean, yes, obviously I learned some stuff at school, but I mean, relative to what knowledge I picked up on my own from just constantly wanting to know more, relative to school, it's so much more from myself, right? So in doing that, like, and just evolving, I'm just becoming more and more like, okay, I like cash flow and assets that I think are going to be worth more. I mean, anybody likes assets to be worth more, right? But to me, it's about, fighting against inflation because yeah, you can stack money in a bank account, but it's also being out inflated, right? Theoretically, but it's a unique time too because also keep in mind this is perspective of somebody I've never even had the opportunity to earn this kind of interest in a bank account. It's bonkers to me that I'm earning like 5% right now in a Goldman Sachs savings account. I'm like, wow, like this is what a risk-free rate is. I actually understand this now from school when they talked about it. Because I literally, like I said this in the past too, but I'll say it again. When I was in school, I remember learning, like in college, I would be learning like, oh, if you're determining if you should make an investment, right? They would say stuff like this, or just this is generally speaking, right? Like you want to think like, okay, if I can earn a guaranteed like 5% on a U.S. Treasury on a money market fund, you want to make sure you're earning 5% or more, because if not, excuse me, then the risk-free rate, right, is just 5%. You don't have to take any risk. You just put it in high yield savings, and if it's like Marcus by Goldman Sachs, for example, right, is FDIC insured. FDIC insured banks, so it's legit. Like some people don't like. There's people my age that I told me, yeah, you can earn like 5% on a high yield savings account. They're like, that has to be a scam. I'm like, no, it's an FDIC insured. Like it's a legitimate registered bank, but it's just online based, so they don't have as many overhead costs. So they're able to do, you know, interest paid. And also, when I talked to my parents, they're like, yeah, it used to be a time when it was normal to earn money in a bank account. But I was at a point in college where I was learning about the risk free rate and just the idea of just a guaranteed return. And I was like, that doesn't exist. What? I don't understand. But that also just kind of plays into like where we are right now with the whole printing money situation, that for so long we just took advantage of low interest rates. Yeah, print, print, print. But now like there's gonna be consequences. And I forgot who said this, but it's like inflation is like getting drunk. Like it's all fun and games, right? While you're just drinking, 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 right? And by the way, I got to do another beer chug for GameStop. I did a while back. Got to run it back. It's an honor of GameStop, And who doesn't love chugging beer? Just when you're with the boys or just at a good party, right? Having a good time. Next time I'm gonna try and remember to do that. But I'll be honest, I'm not the best chugger, but for GameStop, make it happen. But to digress. Oh my gosh, what was I saying? And then I started talking about beer chugging, like degen. But yeah, so you have to compare like I was thinking at the time, like that doesn't even make sense. Like there's no interest rates. So a lot of people my age don't even understand. Oh, no, sorry. Yeah, a lot of people don't even understand that you could actually earn like on your cash. Like it's like unheard of because our whole lives that hasn't been a thing. It just seems suspicious, for like from a younger person's perspective. But inflation is like drinking, where you could drink, 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 and then right, like right now we're still like printing at this high interest rate, but soon interest payments for the government is going to be higher and higher and higher. And then if you look at Japan, for example, right, they're emergency issuing bonds, emergency buying back bonds operations, and their debt to GDP is 300 something percent, and they went through a scenario like this already. I think in the early 90s, where they were just trying to boost the economy too much. They went too hard, and now they are like kind of like stagflated, or I don't know. Now I gotta look into it more. Like I know it, but I don't know it enough to speak on it fully. But what I do know is debt to GDP for Japan is over 300% at this given moment in time. And if something doesn't change, which unfortunately it doesn't look like it, we're on track for that, right? In the United States and other countries around the world, which is like, damn, what does that look like when the whole world becomes like that? I don't know. I don't know, right? That's a mystery to be seen. But ultimately, it's a journey, right? And I don't think anybody truly ever knows exactly what's going to happen. So you got to just keep adapting and keep learning and just understanding things. And that's my perspective, right? And you could have your own perspective in any which way. But if you follow this golden rule of investing more than you can afford to lose, you don't wind up in a spot where you're losing sleep at night over. Oh, excuse me. Speaking of losing sleep, I keep yawning. I didn't sleep much yesterday, but it was just because it was like a busy weekend. But it was a good weekend, family stuff and whatnot. So yeah, if you follow the golden rule, just never investing more than you could afford to lose, I think it just kind of keeps you in check. It keeps you at bay. Like that's really what it comes down to. Let's hit the chat real quick. Hey, Tetron, dear GME, hope you're doing well. How's your head? Oh, uh, everyone's saying cheers. Head is fucked. What happened, XBit, man? I hope you're all right. Your head, that's some serious stuff. The U.S. dollar is doubling schedule. Yeah, it just keeps printing. Tetron, you streamed last Wednesday. I attended your stream Monday and tried to attend Wednesday, but I didn't get a YouTube notification. No, Brayton, I actually was sick last Wednesday, so I did wind up canceling the stream. And actually, I'm glad you said that because it reminds me, and I did tweet this out in case you guys missed it though. No stream for Wednesday this week, but I am going to stream again tomorrow night, so you can catch me live again tomorrow night. But yeah, it's just about improving. It's just about improving. I've kind of gone on a rant here. And I'm still working on this, but the mission statement for Tetron, right? Legitimate financial journalism, sharing ideas, thoughts, and opinions surrounding investment opportunities actively discussed online. I think it doesn't sound too bad. But again, I'll keep working on that. And then let's hit what's it called? Evernote. I've slowly been moving my Evernote stuff into Obsidian here. This thing is super cool for note taking. I recommend you guys try it. It's called Obsidian. It's like this open source thing, and you can do plugins with it. You can like import videos, and like what I have here is like a canvas of like all these different documents I did, right? Like, and I'm able to like sort it out neatly. I mean, this is the most neat, but it's neater than what I had before, right? The GameStop canvas, like this is very miscellaneous, where it's a lot of the same stuff, but kind of all over the place. This is about the business priorities, and right here, what this one was Q3, or this was Q2 2023 business priorities. Whereas this is Q1 right here. So there were some slight differences. I'd gone through that in the past. And it's cool. You can put, there's a way to even put like a YouTube video in here. I've seen people do it. I'm still learning this platform as well. So I'm still wrapping my head around. Excuse me. And the IMX token grant. Oh, okay. This is something I've been meaning to touch on because I think I slightly may have been misunderstood in the past and slightly maybe described it wrong. And then we'll switch over to Evernote and just kind of go through some of my stuff on there. In January 2021, the company entered into agreement with Immutable X that rewarded GameStop IMX tokens as certain goals were met. After the first goal was met, GameStop recognized a $79 million non-current receivable and deferred income liability in Q1 2022. In 2022, the company hit two more milestones and added another $33.8 million to deferred income liability for a grand total of $112.8 million. Non-current receivable, the amount of money companies owed, but to be recognized over a 1 year plus time period. Because remember, current is within 1 year, non-current is over 1 year. In this case, it was a 2-year period. Deferred income liability, deferred or unearned revenue, an accounting term that represents money received by the company before revenue is recognized. So it's listed as a liability on the balance sheet, but as the company recognizes revenue on the income statement, the liability is deducted. So in summary, the company is able to slightly lower SG&A each quarter from 2022 to 2023 by recognizing revenue periodically relative to the token grant. So I thought originally, that made SG&A lower, but I think like this is where I'm getting mixed up. I'm like, is it? I meant to just fully understand this before I talked about it, but now I just started talking about it. And I'm like, ah. So in summary, the company is able to slightly lower SG&A each quarter, right? So it's being deducted from SG&A, but that would mean theoretically that same amount won't be deducted from SG&A next year. So if they don't cut those costs in another shape or form, right? There's about, I think it's like 15-ish million being deducted from SG&A to lower SG&A each quarter through this. Whereas next year, it's not going to be accounted for because it was throughout 22 and 23. So these next 2 quarters, this will still be a factor. But theoretically, SG&A could go up slightly, right? If costs are cut in other areas, it would offset. Because if this isn't being deducted from SG&A anymore, then let's say like SG&A for the most recent quarter, right? Let's see, I have that up here. Was 322.5 million. If about 15 million was deducted, right? Theoretically, that means SG&A would have been 337.5 million, right? And that's if everything was exactly the same, not including the IMX token grant next year, then Q2 of 24 would theoretically be 337.5. So that's the idea there. But if they cut 15 million elsewhere, then that would offset. SG&A is still 322, and I really want to see SG&A stay flat year over year. And in an inflationary world, cost of doing business generally starts to be more, and just you got to pay people a little more. You got to spend a little more on this, a little bit more on that. So if they can at least keep it in line from 23 to 24, I think that's great. And just focus on selling higher margin items, some potential, you know, more stores like Italy, closing down maybe some more unprofitable stores because, while store closures are never a good thing, what you have to realize is GameStops are a lot of times in shopping centers or malls. So if that said, like a particular shopping center or mall is losing stores, right? It's like other stores, right? That aren't GameStop, don't even have anything to do with GameStop. It's losing general foot traffic, which means it might generally hurt that specific GameStop. And that's where you have to have a good management team in place to recognize what's happening in particular locations to make the right decisions, particular regions, particular districts, particular single locations, right? Because if you have a store in a GameStop mall, and let's say that mall previously had like 10 food places and 30 stores, and year over year, your GameStop, you look at it, you're like, oh wow, they're down to only 8 food places available, and it doesn't really look like the other 2 places are being rented out anytime soon. Now those are vacant, and a couple stores that were there have wound down operations or moved out of there themselves. All of a sudden, that mall isn't getting as much foot traffic, and that's indirectly hurt GameStop. And I think that's where they have to really keep improving e-commerce and where the experience-based stores come more into play because it's really about going there for the experience. And there's less GameStops, but they're higher quality kind of idea. Maybe that's something they shift to in the long term. And something I said in the past, which I still want to see with Player, where there's something in the store where it's easy, just scan it and like you can easily hop on it when you get home, right? Like it just sends you a link, boom, easily makes an account. Maybe it even connects to your GameStop Pro account in some way. That would be great. So if that were the case, it's kind of vertically integrating, the platform. Like, and if they could somehow get e-commerce available on Player, like you could buy stuff through Player, like the GameStop website through Player. I mean, that's like a really far-fetched idea, right? Potentially, that could be great, right? So we'll have to see. We'll have to see if that happens. But those are all just things off the dome, guys. Things off the dome, and we'll touch on this in a second. What's your expectation for Q3? Dearest GME, honestly, I think it's gonna be just a slight profit. Like my expectation, right? I don't have an official prediction yet, but let's see. Where have I put in the past? Okay, I can get rid of this because this doesn't fall into this category, and that was so I didn't lose track of it previously. Sometimes I have a habit of just dumping stuff. So this was for Q2. Q2, I overestimated. Sorry. Yeah, I guess I no, yeah, I underestimated net income because I estimated it would have been lower. SG&A was pretty good estimate, honestly. And top line revenue had just slightly missed my estimate. But if I was gonna go Q3, estimates again, and then we had the actual results. Let's see, touch on estimates. We're going to leave this blank for now. Revenue increases. Again, we'll leave it blank. Leave it like this because I don't think it's going to decrease, but anything's impossible. So I'm going to leave increase. And I'm not even going to make this number right now. I'm just trying to leave it as like a filler type of thing. Then just leave this. But with my net income, I think EPS is going to be positive. Like, I think it's going to just eke out a profit of like 1 or 2 cents, right? We're going to say 2 cents for now. I might change that. That's my idea because, if you look at the last quarter, like they still have to continue to improve operations, but what's helping them and might put them over the edge is that one-time profit they're going to recognize of $6 million from the sale of European property, land and property. You see right here. So that's one-time gain of $6 million. I believe that's just going to be recognized as other income, something of that nature on here. And this interest income should be higher. So if theoretically their operating loss again was like 15 million and their interest income was like 16 million, and then they recognize that one-time gain, it would be about 7 million, and that would be about 2 cents a share, right? Positive 2 cents a share. And that's where I come up with that number. And if that happens, right, then for the 9 months ended, the number would be negative 15 cents per share thus far through the year. So they would just have to have greater than 15 cents a share EPS for Q4 for full year 23 to be operationally profitable, right? So that's just kind of where my head's at. I got to really think about it before I create like official Tetron estimates, even though they're not like official. They're just Tetron estimates, right? I mean, analysts can make estimates, so why can't I? I can, and I encourage everybody out there to make their own estimates as well. Do your own napkin math, or even if you're just using what you know, right? And I think just kind of keeping track of it's fun. Like that's something I've been starting to do since the start of the year. Yeah, so Q1 I didn't make the best estimates, as you can see, and I didn't make as sophisticated estimates, whereas here I was a little more in depth. And if you could see here, like SG&A was a little more accurate. EPS, the actual results were like right negative 1 cent. It was a little bit closer. It was only about 7 cents off my estimate, whereas in Q1 my estimate was way off, right? Because I estimated 1 cent per share profit, and actual results were negative 17 cents. And yeah, it doesn't mean like, oh yeah, like what I had one quarter be slightly better than the other. That means, oh yeah, this quarter I'm going to be even closer. But as I'm doing it more and more, like I'll get better at it. That's the idea. So like it's like anything else, generally speaking, how you get better at anything in life is you just be repetitive, right? Like doing something consistently makes you better at it over time. Like that's really what it comes down to. Hey Jesse, hope you're doing well. Everyone's saying cheers in chat. I always love that. Yeah, I gotta get. I don't think I could get a webcam because if I could use the whiteboard somehow, that would be cool. But I don't know. This keyboard, this cube. I can't even talk. Laptop camera is definitely not gonna cut it on that. I would have to like switch it to my phone, but yeah, I don't know. I don't even have anything I want to write on the whiteboard. I just want to use it because it's always fun to like. I don't use it as much these days. I used it more in the past just to scribble ideas, like. But it's mostly for me. It's like something pops in my head. I just slide over like this, grab a marker, write it down real quick, right? Like I just have some like miscellaneous stuff written up back there right now. I don't know if you can see it, but just stuff like that. And if you guys see my desk, like it has like all kinds of papers. Like look how many like things I have. Like I have all these like different like post-it notes. Like I'm a big post-it guy. Like I gotta sort all this because what it is like I'm at work and like something hits me and I'm like, oh, I want to follow up on that when I get home. I write myself a quick post-it. And at the end of the day, I stuff my post-its in my pocket. A normal person my age, right? Somebody living in anybody, right? In this world, digital world, would probably do it electronically. But for me, like sometimes that like pen and paper like just slaps different. I don't know, or just like helps me balance like the difference, not difference, but living in the real world and living online. Because for me, like I just feel like I need to just disconnect from the internet sometimes, and that's what's best for me. I know, like for example, Rance, he can go at it all day long, and maybe I'll get there one day, right? That man can grind, and he can be like, you could just tell the way he does things. Like he could be locked in on something for like 5 hour streams, just 5 6 hour streams sometimes, right? And for me, that's a lot. And what's best for me and how I can also do the best quality stream is like keeping it shorter and sweeter. And by having stuff like handwritten, sometimes when I'm sorting through my information, thinking about stuff, it's not like I'm always on a computer. And for me, like something I struggle with that I think tons of other people do, especially younger individuals, is you start looking at one thing and then all of a sudden, like you're down a rabbit hole of something completely different that you didn't even really get anywhere with what you originally were looking up, right? So yeah, that's how that can go sometimes, and that's kind of my reason for just choosing to to handwrite some stuff still. I don't know, maybe that's kind of silly. But another thing I just got, GameStop wired gaming mouse, pretty dope. Honestly, I'm deciding what I'm gonna do with this. Might hang on to it till when I create my PC. Maybe I'll give it away at some point, so stay tuned. We'll see for that because I kind of want to keep it because it is GameStop mouse, but I also kind of want to give it away. I don't know. We'll have to see. Maybe we'll do like a Christmas giveaway, first ever giveaway for Tetron. So I think somebody had told me like White Rabbit is doing some kind of giveaway right now, so you guys should be sure to check that out. He streams sometimes. I haven't checked him out yet, but he seems like a cool dude, so shout out to him. Um, yeah, I mean, I think that's pretty much it for today. I know I put in the title like GameStop stock. I always kind of put in the title now like market economics, stock markets as a whole, and like economics and GameStop. Some days it's more about things in general. Some days it's more about GameStop. But like, if you guys just keep pulling up here to the stream, like I'm just gonna give you the most information I can. Like that's how I'm doing it. That's so if you're ever like, oh, why does he put this in the title? And then he completely goes off because it's like, to me, it's like my show and I'm just doing my thing, and it's not always gonna go as planned, and I'm all right with that. And it just perspective. I've been just trying to do some research on dividend stocks. Just again becoming more curious about cash flow. And for Pepsi, I'm looking at they've consistently raised their dividend for a long period of time, and from going to 22 to 23, they raised their dividend 9%. And for what I'm looking at with like raising dividends, and the next one I'm probably gonna do like this is probably gonna be Costco. So I'm gonna do that down. I know Marantz is big on Costco. And this is actually something I heard him say on a stream once, and I was like, oh, yeah, that makes a lot of sense. Where he was saying, like, with their dividend, right? In Costco's case, and this is what I was kind of looking at with Pepsi, where their dividend, like, they're raising it by 9%. That's greater than the inflation rate, right? So the dividend being paid out per share is greater than the inflation rate. So they're growing the cash flow more so than what the inflation would be. So also when you look at Costco, like year over year for their dividend raising, it's about I don't remember the number off the top of my head, but it's greater than the rate of inflation, right? And with Costco's case, right, they've done special dividends in the past where people floating the idea maybe that's something GameStop could do one day, where what that basically is you see how Pepsi, this is the historical reporting for each quarterly dividend. If you look at Costco's, they randomly just have like whatever, like it would look kind of similar to this, right? For whatever the numbers are, like just consistently rising. Like they're both dividend aristocrats. So dividend aristocrat is just a company that consistently raises their dividend. But in the case of Costco, if you look at their numbers, there's always like one time, not always, but there's been a couple instances where they do one-time dividends where they just make one lump sum dividend of like $10 or $15 just as a one-time special dividend to reward shareholders. And could that be something GameStop does one day? Maybe they don't necessarily implement a dividend, but just when things are rocking and rolling, they're like, okay, we really want to mostly invest our money in growth, but we do want to reward our shareholders for this long holding. So maybe we're just going to do a special dividend of $1. Because think about it, right now, if they did a special dividend of $1, and I'm not saying they should do it right now, to be very clear, I don't think that's the best idea at all. But I'm saying once they're rocking and rolling and the balance sheet is even stronger, cash flow is consistently positive, income's consistently positive, right? When that stuff's happening, maybe they go, okay, well, we mostly want to reinvest money, right, to grow the company. So we don't want to do it like an issued dividend. Like we don't want to start becoming dividend aristocrat status. But maybe they think, okay, well, we do want to return capital to shareholders. And at this point in time, the company's strong and we have some excess capital on hand. Let's do a one-time dividend of $1 per share for all of our shareholders. Because if they did that with 304 million shares outstanding, it would cost them $304 million. And when you look at the fact they have 2 billion in cash equivalents, marketable securities right now. You're like, oh, okay, that's doable. But again, not saying they should do it right now. I'm just saying for like perspective, where maybe they don't want to set it up as a consistent dividend because they want to be consistently like reinvesting funds, but they want to maybe just do like a one-time payment type of thing. Maybe that's something we'll see one day. It's like listening to Roaring Kitty 2023. Yo, Draw, honestly, that's truly a compliment. Wherever Roaring Kitty is out there, I hope he's doing well. And I feel like he kind of maybe has the same mentality as me where he needs to like have his own, like, and that's why he stepped away. And I don't think he ever imagined everything happening the way it did in January 2021 and the whole lead up to that, right? Where he just wanted to kind of, live his own life and do his own thing sometimes. And I kind of feel that way too. But then when I completely like don't do stuff for a while, I'm like, I kind of miss stuff online. You know what I'm saying? So it's like about finding the balance. But no, I really appreciate that comment. It's very nice of you to say that. You can make pre-recorded videos with the whiteboard and keep Obsidian on the lives. I don't know. Yeah, no, Calvin, that makes sense. Honestly, yeah. I got to get back on the videos. I don't know. Lately, I don't know. Lives have just been kind of where my energy's at, and I'm still putting information together. And my perspective has changed a lot on videos, right? Like I used to just like run up a quick video, and like I don't think there's anything wrong with that. Just doing just like no edits, just straight recording, right? But if I truly want to scale Tetron, like if we're being real, then I want to make high quality videos. Like I've studied Mr. Beast a lot, and like I'm very fascinated by him, and I think he's an incredible dude. And his most recent video, he basically built a bunch of wells like in a lot of third world countries where, and I'm watching the video like, wow, I don't even think about that. There's we have all like everyone has their own problems, right? And there's people out there that literally just getting water, like clean drinking water, is like difficult for them. Like, and when you like see that, it like kind of like reminds you, like, all right, like whatever I have going on in my life is not that bad. And also when you just like zoom out and have the perspective of there are people out there like fighting for their life every day, whether it's something they have going on or medically or family or I don't know you, but point being like whatever your like when and then when I think about my problems and I'm like, well, this is not a real problem relative if I put myself in the shoes of someone else, right? That's going through something difficult. That's all I'm trying to say. And in watching Mr. Beast's video, I was like, that was like inspiring. I'm like, I want to be able to do stuff that one day, like if I do really well, right, where I can give back and help people, right, and just I think that's a great feeling. It makes you feel good inside. But to digress, that's not where I was going with all that. But my point being, with Mr. Beast, right, I've been studying his stuff a lot, and he talks a lot about the highest quality videos, right? And it's better to just make like a super high quality video than just a ton of videos. Like not saying there's anything wrong with that, but and also I want to like create a high standard for myself, and like that's just kind of something I'm trying to shift towards. But I want to figure out the best way to do it. And me and my brother for a while now have been talking about working together. Like I'm trying to convince him to be coming on the Tetron or do something with me, start collabing with me in some way. He's still just kind of figuring out stuff for himself. He's even younger than me. He's still in school, so he's just doing his thing too. But I'm thinking, maybe we'll do like some kind of podcast type of thing one day because we do have interesting conversations, and really we're both interested in establishing wealth and building ourselves up from the ground up, kind of like GameStop. No, not exactly like GameStop because they're more so shifting. They're not building from the ground up. That's more Chewy. In the case of Ryan Cohen and company he's operating or companies he has operated, but I don't know. So that's just kind of some, excuse me, insight to behind the scene Tetrons, like where my thoughts are at as of late. So yeah, I think I'll kind of leave it there for today, but let me hit the chat again. Did you miss GameStop employees getting their benefits cuts, 401ks, insurances? Yeah, September. I saw that. I have to do research on that before I talk about it because someone did comment that, one of the constant trolls on Twitter, and I'm like, all right, I'm gonna look at it because that is worth looking into. Like you don't want to just put on the blinders. Like as much as you love a company, you can't just like put on the blinders. So I do want to look into that and see like exactly what the deal is. On the surface that sounds bad, but let me look at it before like I say like, oh yeah, it means this or that, because I haven't truly like looked at it yet. Interesting idea. They did split via dividends, a special thing for shareholders. That would be nice to have a sort of dividend. OMG, Mr. Beast with 100 wells, well dividend. Yeah, platinum. Good to see you. Hope you're doing well. Thanks so much for tuning in. But yeah, no, Mr. Beast is awesome. Like he really is inspirational to me. Like, he's basically my age, and he's the most one of the most famous people in the whole world, right? Like that might sound kind of crazy to say, but it's like he can at this point go to almost any country, and like he's in an airport, and like everybody starts like coming up to him. Like he's at the point like he's never even gonna be able to go to like just buy groceries, right? Like if you just wanted to go buy a I was gonna say a chocolate bar, but it would be a Feastable bar, right? Which is also incredible that he's doing that, and he has the Beast Burger thing. Like, just so much to learn from that guy. He's Jimmy Donaldson, what a guy, right? That's his name, yeah, Jimmy Donaldson. But yeah, so much to learn from him, and my perspective in listening to a lot of stuff is like, you can make if you make a really high quality video, like it can really go a long way. And I'm not saying like I have to be Mr. Beast level good, but I'm just kind of, thinking about how I want to do things from here. And I'm just doing my own thing, going at my own pace, just rocking and rolling. And yeah, that's really it. So I think I'll leave it there for today. I always say that like a gazillion times before I actually end streams. But you guys know how it goes. Really, I appreciate all of you guys so much. Even if you just come on once in a while, or you come on consistently, or you just know of me, whatever it is. We watch the streams back, you watch it live. Like I really appreciate you all. Like without you guys, like Tetron doesn't happen, right? Like you guys make Tetron. Like I'm always gonna do my best I can for you guys and just explaining stuff and talking about things. Because to me, finance, money, building wealth, it's something I'm interested in, but it's also like a hobby, and like that's why like I like talking about it, and like I want to get my brother more involved so we can talk. I'm telling him like we could basically be documenting like our come up and what we're going through and what our thoughts are, and then we can look back one day and be like, oh my god, like that's what we were thinking in 2023 compared to what we now know in 2026. Like what the heck were we thinking? We were such idiots, right? Like I want to be able to do that. I mean, not to say, like you know what I'm saying, not like, oh yeah, I was just dumbass, like saying like, go all in on AMC, right, or something like that. But more like, wow, I've look how much I know like now versus then, and even if you look back at like my first videos versus now or streams, like I think how I do things has changed, and it's just about consistently becoming better. But I want to just document like the come up of accumulating wealth and accumulating assets because I think it's something everybody should do, right? Like there's this stigma that, oh well, I didn't go to school for finance, or oh I don't know about money, oh I don't know about stocks, I don't know, like oh it's not my thing, right? And people just like kind of like just immediately dismiss it. It's like, why not? It can be, it could be anybody's. Like that's kind of like my thought. It's like, and it doesn't have to be like that it doesn't have to be a hobby or something you're super into, but you have to be able to like have yourself in good order in your finances in a crazy world with just constant money printing and just craziness, right? Like you got to do what's best for you. And I think documenting the journey of figuring that out as a young individual with my brother, who's also another young individual, even younger than I think it'd be a cool thing. So I'm trying to get him kind of on board in some shape or form, not maybe necessarily officially like on every stream or something like that, but just something we could do together because he's also really really good editor. Like he's really really good. Like any of my videos you've watched where you said, wow, that's really good editing, shout out to Zach. That's my brother. Like he's really the one that's clutched it and he's done most of it or helped me pretty much edit the whole thing because he's really good at it. And he's a sharp guy. Like when he commits to something, like he locks in on it, and I like that. So maybe something will happen with him soon. We'll have to see. But that's kind of a sneak peek at Tetron, some perspective and whatnot of where I'm at right now. But yes, no, I'm actually going to wrap it up here. Dr. Steve, thanks for being here. Hope you're doing well. Steven's my middle name, so I like that name. Always great. I appreciate you, Platinum. You're always doing great stuff too. With Super Stonk and putting in the work out there. I appreciate you very much. And I know you catch a lot of heat from a lot of people on like Twitter. Like, I think it's like crazies and bots and I don't know what's it's they just love to attack you and badass trader the most for whatever reason. And I salute you for just always just pushing off the haters and just doing your thing. So shout out to you, Platinum. But yeah, thank you, Tetron. Have a good night. Brayton, I hope you have a good night. GME Bitcoin charts resemble. I'll have to check that out. That's pretty dope. But yeah, Jason, sorry, y'all draw. Yeah, y'all draw. Okay, I think I said that right. Hope you have a good night as well. Hope everyone has a good night. Calvin, Xbit, Jesse, Brayton, DRS, Jimmy, everyone out there. Actually gonna wrap it up now.
Have a good night. See you tomorrow. I'll be back tomorrow streaming 7:15.
Peace.